Welcome back to Whissel Wednesdays right here on 1170 The Answer. Good evening. My name is Clay Murray. I work with Jason Hall over at Team Home Loans, hosting for Kyle Whissel this evening and joined by our Whissel agent extraordinaire, Stephen Wener, here this evening.
Wow.
Yeah,
thank you.
A lot to live up to there, extraordinaire. We talked with Brad Holland last segment, and Steve expounded a little bit upon, what all goes into the Boys and Girls Club of Carlsbad, why you're involved, why Brad is involved, what exactly they're doing to help, and it seems just like an outstanding organization. And to give back to kids, there's really nothing better out there.
Well, there's a moment of silence there, but it allows everybody to think, because the reality is we all started off as these little monsters running around.
Yeah.
And somehow we all got shaped, right?
Exactly.
That's just it. We all got shaped. And we're still being shaped, but it's that initial foundation that shapes our entire future. And to have an organization like this, where all of these people that may not have the resources or the help come in, get help, actually have mentors to look up to, and shape a future for them that they may never have had. I mean, who are those people and who do they become? And you can look at the history of so many of the people that have gone through the Boys and Girls Club, whether it's Carlsbad, anywhere in America. And these people, they give back. They understand what it means to share. They understand what it means to not have, and when they have, how to give it back. So, I mean, where do you learn that, and great parenting.
And great role models.
Great role models. If you don't always have the parenting or role models, if you walk into an organization like this that focuses on providing the role models, the organization, all of the things that they provide, from swimming to basketball clinics to outings to learning life experience, putting on banking courses. And these are for children. Where are you can't even go to, there's no classroom in an elementary or a middle school or a high school that teaches you any of this.
Yeah, and an outstanding organization. Brad, he touched on a lot of it. So I commend you for getting involved. You didn't have to. You saw something there that you wanted to get involved with, and I'm very glad you did, and I'm sure that you are as well. You're going to be seeing the benefits of that for the kids, but also I'm sure internally it's going to change you for the better.
Well, so before we go into the next segment, the biggest part of this for me as well is for my children to see what it means to give back. That for me is, I want to do my part to give to the organization, but I want my children to understand what it means to be able to give to something like that. I want them to incorporate that into their future.
Absolutely, and making yourself a role model then for your kids. So we talked about the importance of that. Outstanding work out of you. We teased a little bit that we do want to talk the market. Obviously, this is Whissel Wednesdays, a real estate show. We've got a real estate professional in here. We talked about shaping kids. I want to know how the market is shaping up right now. We've heard, earlier in this year, it was a firestorm.
Yeah.
It was a seller's market. Properties were, escalating in equity like crazy. How is it right now? What's the shaping look like going into the holiday season and 2016?
Inventory is still really, really tight. And a couple of the things that the average consumer may not pay attention to on a daily basis, but we do, of course. You're in lending. I'm working in the real estate side. There have been some major changes, which I'll allow you to talk about because it was more impactful to the lending side, which is TRID, or just the truth in the lending and how everything is disclosed and what happens to the forms now. So that's a big deal. And the other part is the Fed talking about the interest rate rate hike, which may still come in December.
Yeah, that is not behind us.
No, and something that I guarantee nobody's talking about that we had a meeting in our office about was even the changes in FHA appraisals, right?
Yeah, a lot more strict on the appraisals.
Right. Guaranteed you as the consumer have not even heard about this. And I want to touch on these things because for the people that are purchasing through FHA, you go through a home, if things were, maybe semi-suspect, you could probably get away with it. Now, not so much. You know? So,
well, let's get right into that.
Yeah.
I mean, the FHA product is great for first-time home buyers. It's great for people who don't have great credit. It's great for people who want to get back in the housing market, back in the game after, suffering a BK or suffering a foreclosure. It's a government product where they allow you to get back in the game before the conventional products do. So it's a popular loan. You can get into a home with 3.5% down, and going all the way up to the county loan limit of 562, 350, and put 3.5% down. That is a great loan for people to have in their back pocket, but it has been made a little bit harder to come by because of the FHA appraisals. Talk a little bit about what your appraiser expert shared in the meeting a couple weeks ago.
Well, I mean, you can even have things as small as chip paint. So if you've got any issues with paint, if there are some exposed carpet issues, I mean, an appraiser is not going to go in as an appraiser anymore. They're going to go in as a semi-inspector. So if a house has anything that may be called out, it's going to become an issue to the seller of the home, because the expectation is going to be for the seller to rectify those issues before the close of escrow. And if that was an unknown, all of a sudden now you're changing the mindset of where the seller was, because they agreed to a contract. And now you've got an appraiser. It's not even the purchaser. You've got an appraiser / inspector coming back and saying, sorry, this doesn't work for FHA. Please fix this, this, and this. And we want to make sure that this, this, and this is fixed prior to close of escrow. And we want to verify it. And now that becomes an expense.
Absolutely. And the biggest takeaway I had from our appraiser who came in was the law is kind of now, if you have it, it has to work. Otherwise, your appraisal may not come in. He's going to say, you got to fix this, and then I'll assess a value to the situation and to the home. So, you want to make sure you're working with a real estate professional who knows about these things that are now involved, because honestly, you never know when you're going to get an FHA offer. They're out there. There's a lot of first-time home buyers who want to go with that product. And if you have a great agent like yourself or like any of the other agents at Whissel Realty who is listing your home or representing you for your sale, you should really have them come into your house and check it all out. Walk room by room. What's this? Why isn't this working? Because, now you guys have become empowered to kind of be the pre-appraisers.
Sure.
To take a look at things and say, this might be an issue moving forward if we do receive an FHA offer. So, how has that changed your approach to your listing presentations or trying to, get some business from a proposed seller?
Well, knowledge is power, right? So if you come in and you differentiate yourself over any other listing agent and you say, listen, obviously from the listing side, I'm going to show you where pricing is, what our market stats look like. All that's great. That stuff stays the same. But the things you want to incorporate are the possibility of a pre-inspection. So let me go to the flip side. If I was representing a purchaser, when I have my home inspector walk the home, I tell the home inspector, I say, understand that this is a VA or an FHA loan, and please look at it from that perspective so I understand what an appraiser is going to call out. So just even announcing that, so your inspector is making the inspection a bigger deal as far as the minute things that they may not have considered. Something as small as on a gas stove, one of the burners not working. If the appraiser turns one on and it's not working, guess what? There's a problem.
That's right. If you have it, it has to work.
Right. So, and again, as a professional in the industry, and a professional is a big word. What does that mean? Somebody that's constantly training, learning, understanding, so that I can bring value to the consumer who hires me for my services. That's a professional. Not somebody that just has a real estate license that comes in there and has no idea how to represent a $500,000, $1 million, $2 million transaction. So, those are all big deals. And not just the change in the FHA guidelines, but TRID, which I want you to talk about. And that's a big deal because that can even affect time of closing. So
yeah, TRID has really changed the disclosure process and really changed the escrow process itself. They did away with some documents, the Truth in Lending doc and the oh my goodness, the GFE, the good faith estimate.
Great lender, he remembered.
There we go. No kidding. Thanks, Paul, for that one. Anyway, so they have combined those into what's called the loan estimate now, and that estimate has to go out ASAP as soon as you're in contract. And we need to make sure that the buyers we're representing are truly pre-approved, not these fly-by-night lenders who say, you said you make this? Okay, great, let's run with that. No, because once we get into contract, we don't have time to then start verifying. you need to make sure you're working with a lender who has verified you up front. And it may take a little more work and a little more time in the beginning, but trust me, when you are in contract, it is going to make all the difference. A lot of lenders, a lot of real estate professionals are scared of the 30-day escrow period. They want it to be 40 days, 45 days.
And why is that?
It's because not only have we changed it up front, but on the back end, we now have the closing disclosure. Once you are clear to close, which everyone is thanking God when they see they're ready to draw and sign loan docs. Nope. Now we have to wait 3 days before you can sign those loan docs. And that's an opportunity to protect the buyer to think for 3 days, do I really want to go forward with this? You know, you've probably passed your contingency period, but that doesn't mean you can't pull the plug and walk away. So, you know, the laws and the TRID new rules are to protect the consumer, but you need to make sure that you're working with a lending and real estate professional to really protect yourself and to get these deals done on time. Otherwise, you know, you're going to end up out of the property anyway, or paying extra to extend the lock, extend the escrow period. So we'll talk a little bit more about it when we come back. This is Whissel Wednesdays right here on 1170 The Answer. Don't go anywhere. Steve and I will be headed right back.
But not pennies. No.
San Diego's home for intelligence.